All right, everyone. Well, here we are. It's Wednesday, and I am sitting in the green, up $11,469.19, which is a solid green day, twice the daily goal. My daily goal is 5,000. Yesterday, I was up just under 10,000. So that means in these last 2 days, I've locked up over $20,000 of profit, gross profit. That's phenomenal, except for the fact that, well, you probably remember, Monday was a max loss red day. So the problem with having a max loss red day, and this was especially true on Monday, because I had every opportunity to walk away early. You know, I went down basically to max loss. I recovered and got myself just $500 shy of my daily goal of $5,000. And then in one trade, I went right back down to break even. And rather than just sort of accept, all right, it's going to be a small red day, what I knew in my mind at that point was that because I had already traded so much, I had probably generated a lot of commissions. So I knew that even though I was only up or down $25, I was really probably down a bit more than that. And I was like, nope, I'm not willing to settle for this. I get right back in. I mismanage my risk, just emotional, impulsive, and in an instant lose another 5-6 grand. And now I'm back to max loss. And then in the afternoon, after I finished my recap, I came back and I was like, you know what, there's a couple stocks moving. Maybe I can recover a little bit. And I just dug my hole deeper and deeper and deeper. So then what that meant was Tuesday, yesterday, you know, $9,000 is great, but that's just digging me out of the hole from Monday. And then I come back here today and okay, I got some profit, but big picture, when I'm thinking about it, I'm like, you know, I'm not up that much on the week. Yeah, I'm green on the week, but I'm not up that much on the week because of this mistake on Monday. And so I kind of got to this point, especially yesterday, where after a couple of good trades yesterday, when I was up 5 grand, I was thinking to myself, you would be back to flat on the week. You would actually be back to green if you hadn't kept trading on Monday, right? So now everything, like if I had walked away exactly when I should have, then, you know, after my first like 4 trades on Tuesday, I would have been sort of back to whole. But I kept going. So then all of those following trades, I was like, these are the ones that's just cleaning up the mess from Monday. And it kind of reminded me of this time I had this old Mercedes. It was a W123 Mercedes. It was a 1985, a diesel with the 617 engine. And these are awesome cars. These are the engines that you can run for 1,000,000 miles. And a lot of people like them because you can run them on veggie oil. I mean, those engines are just amazing. The problem is, of course, in New England, the actual vehicle will rust out long before the engine dies. So anyways, I had 2 of these cars, and one of them I was getting ready to sell. So I did an oil change on it, and it has this, it's really easy to change the oil. You can do it from the top. You don't have to do it from the bottom. You can, you unscrew this lid and you pull the top off, and there's a canister oil filter that you just pull right out. So I pulled that out, you know, I change it, I put it in, start the car, and I'm like, this is good, this is fine. I get out and I see that there's a huge puddle of oil under the car. So as soon as I started the car, it's just like pumping oil. It sprayed all on the inside of the hood. And what I neglected to do was set the O-ring on the top of that canister for the oil filter in place. So it wasn't sealed. And then with the pressure, the engine running, it sprayed everywhere. And I had things to do. I was trying to get ready to sell the car. And now I'd made this huge mess for myself. And it was because I was rushing. I mean, I was just, you know, neglected to set the O-ring. I was rushing, and now I've cost myself a lot more time. I'm sure you've kind of had that before where, you know, I don't know, you were trying to get somewhere, you know, you needed to get there by like 5 o'clock, you're driving a little fast, then you get pulled over, and now you're going to be like way delayed. And that's kind of how Monday felt like. You know, it's one thing that I had the loss, but then I made it worse. And that's the part that makes me so frustrated. It's like, that is 100% my own fault. The good news is that we had some great opportunities yesterday, and we had some more great opportunities today. QH, this stock went up over 900%, an incredible 900% yesterday. So you can see the P&L right there, sitting at $11,469. QH from yesterday, this one made the bulk of the move after hours, in fact. And I remember seeing it right sort of in this area, and I was kind of like, oh, that's interesting. But, anyways, didn't do anything with that. And then it squeezes up to 140. After hours goes up to 2, pulls back, and then into sort of 7 p.m., squeeze up to 270, all the way up to 340. Pre-market pops up, drops down, and then sells off. So this morning, I broke the ice with my very first trade on CNEY. This stock is currently up 315%. And I bought it at $1.05. It's at $1.23 right now. I mean, it's up quite a bit. I was already up quite a bit when I bought it. But anyways, this morning, this one started to squeeze right here. And so I got in as it broke over $1 right here. And we got to squeeze up to about $1.20. Sorry, that's not where I got it. I got in, that's 6 a.m. Let's see. My trade was at 7 a.m. right here. I bought 20,000 shares. Now, the problem with these low price stocks is that buying just 5,000 shares, it's just, you're going to make like 30 bucks, 40 bucks. Because a lot of these trades, you're only going to make a little bit. And on this one, I made $286. 20,000 shares, I made basically a penny. I got in, it would have been right here at 7 a.m. at $1.05 on that micro pullback, and it pops up to $1.12. And I was holding the whole thing in case it squeezed higher, and then it came back down and I stopped out basically flat. So on this one, I really felt like I had no choice but to take bigger size. The good thing about it was that it was very liquid, and I felt that I was able to manage my risk very well, which was true. A stock like PLCE, which I also traded, 20,000 shares of this is a very different story. Look at how fast this thing is moving around. 20,000 shares right now, you would have already been up and down $1,000. I mean, $1,000 is 5 cents. So this is way too volatile for 20,000 share position, but then you go to CNEY and you could easily buy 20,000 shares of this. I mean, it's got 149 million shares of volume. You're not going to get that much slippage. And I didn't. So, so that started my day, first trade of the day in the green, which is good. But, I was a little bit like, okay, here we go. I'm going to be churning some commissions today if I'm trading these low price stocks. But because of QH yesterday, I expected these low price stocks would be what was in play today. And if we look at what I made money on, QH was the next stock. So QH, right around 7 a.m., all of a sudden pops up right here. And when it pops up, as soon as it popped up, I was like, okay, I've got to trade this because it was so hot yesterday. There's going to be a lot of people that are just focused on it, and we should see what it's going to do. So it pops up, and I buy 5,000 shares at 240, which is a little bit, just like break the ice, 240. I add for the break at 250, so now I've got 10,000 shares. It squeezes up to 270, up to this high here. It pulls back, and it actually rallies all the way up to 3. So I traded it through this whole move up, buying this dip, and this was a really nice example here where it hit a high of 279, and I just drew this trend line. Then it popped through that level, which was great, and then it came down and dipped off of it, and I said, I'm buying the dip right there. And I got filled in this candle by saying, I'm buying the dip because that was previous resistance. Let's see if it holds a support. So bought the dip, then it comes down again, and this spot touched against, so these two candles here, connected them here, and then boom, they tapped right there. So that was some really nice sort of technical analysis of ascending, descending resistance lines and support and resistance holding quite well. So some nice trades on that. That got me up $4,659, but naturally trading with 10, 15, 20,000 share blocks. So trading with bigger size on it, but I think that was the right move. All right, so that was QH. Then after a series of trades on QH, had gotten myself kind of a cushion on the day when BCTX pops up. BCTX, this one, I actually took my first trade on it in my Thinkorswim account. And I'm going to have another video that I'm going to upload shortly about my Thinkorswim challenge to update you guys on that. But in any case, I broke the ice with Thinkorswim and then came in with my main account and traded it once it got back over $1. So that was right around here to $1.05. So got in at $1.05, and this thing ended up going all the way up to $2. Traded it, getting in and out as it moved higher, just traded this whole range. We had a lot of nice pullbacks, dips off the 9 moving average, dips off the 20, and then some breakout trades. It wasn't as easy to do the breakout trades on it. It was sort of like, breakout, move like 5 cents, breakout, false breakout, breakout, but only by a couple cents. And then it pulls away, bought this dip, then it goes over 2, but then it drops back down at the open. A couple halts down, halt back up, halt down. It's just kind of choppy. And the problem with this is that the halt levels are very close. So BCTX, because yesterday it closed below 75 cents, it's halting every 15 cents. Goes down 15 cents, it'll halt down. It goes up 15 cents, it'll halt up. So the halt bands are really close on this, which makes it difficult to trade. And that's the same problem with CNEY. CNEY, the halt bands are tight. And they were also tight with QH yesterday, which I think is why QH ended up making the big move after hours, because after hours, there are no circuit breaker halts. So all of a sudden, it can really start to open up without getting, paused every 15 cents. So anyway, it may be worthwhile for those of you guys that have the interest in watching the price action into after hours, power hour, and then into after hours to see if we get anything like what we got yesterday. I sort of suspect we may, because what tends to happen is you have one stock that's strong, and then, in sort of that time of day, and then the next day traders are like, all right, what's going to be strong power hour or after hours today? You could see today, people are trading low price stocks for the most part. CNEY, BCTX, QH, EGIO, APDN. 5 out of the 6 gainers right here have a price of under $2 a share. And then PLCE is the only one that's higher. Now, PLCE, I was a little bit unsure about. So at the time that it started popping up pre-market, I was heavily focused on BCTX. Like that's what I was dialed in on, and I was just really in the zone on that. So I sort of ignored PLCE. But then when it started to pull away, I was like, all right, I'll jump in. And it was sort of around this area. I was like, I'll participate in sort of the top of this move, smaller size, made a little bit of money, but nothing crazy. So I'm up 1,700 on PLCE, but some of it was from here, and then some of it was from right here, and then some of it was from this final trade that I took. I was looking for this break through this flat top. I didn't trade this candle here, but I did trade leading up to it here, and then this had a nice sort of dip right there. But unfortunately, it's just kind of this topping tail issue, which was the same issue we had on Monday with SINT, right? Those rejections. I just said, I better not, push it too hard on this one. So anyway, I didn't, and maybe whatever, could have done better on it, but it's fine. I think I did well enough, and it really was choppy. Now, part of that, the float's 11 million shares. That's not a high float, but it's a little higher than some of the others. BCTX is a 16 million share float, but this one had a nice headline, by the way. It had this positive overall survival rate in metastatic breast cancer. So, nice headline there, and nice move. Of course, it's pulling back now. So at this point, CENY is the one that's sort of at the top of the trend and still in focus, but it's not easy to day trade, even like trying to micro scalp this, jumping in, jumping out, jumping in, jumping out. While it's perfectly liquid to do that, there's a 10-cent rejection right there. With 20,000 shares, that'd be a $2,000 loss. And, the halt levels being so close, I don't know. It may end up opening up and pulling away, but I think it's just going to go without me. So realistically, my next best chance for a good trade is tomorrow morning. But there's a possibility that if I had the interest, I could trade this afternoon through power hour, or maybe look for after hours momentum between 4 and 5 p.m. That's not usually something I'd like to do. There's a part of me after a red day that feels like I need to work doubly hard to kind of recoup the losses. So sometimes that means trading during a time I wouldn't normally trade. And it's like, well, you know what? You don't deserve to take the afternoon off after your performance on Monday. You got to stay here, clean up your mess, recover all of those losses. Well, I have now, but, recover all those losses and get back to where you should be on the week. Where I should be on the week is, I guess, 0 on Monday and then 10,000 on Tuesday, Wednesday. So I should be at 20,000 on the week. which means, if I really want to hold myself to that standard, I've got some ground to make up. And I'd have to do it during, a time that I'm not normally trading, because anything I make during the time I normally trade doesn't count because that's profit I would have made anyways. But that's not really a super healthy way of looking at trading. And one of the things that I also, of course, remind myself of is the fact that, as much as I might like to, kind of buy into that, what I also know is that my performance based on time of the day is pretty well established. I do the best in the morning. So if I start trading in the afternoon, statistically, I'm not likely to do well. In fact, I might give back what I've made so far today. And then I'll get really frustrated, because then I'm doing the exact opposite. Instead of, working, quote, overtime to recoup the loss and kind of clean up the mess, now I'm just taking additional losses that's coming off the profit that I made during my sort of, sweet spot time of day. So the right move really is to walk away, to sort of disconnect from those emotions and say, you know what, I'm going to be grateful for what I've got. $11,469 is a terrific day. And I don't need to overstay my welcome. I don't need to push my luck, because that's really what it would be. And so instead, what I think I'm going to do this afternoon is I'm going to record this video on my Thinkorswim challenge. And I've got a couple other videos I've got to work on for Warrior Pro members. So, I've got things that'll keep me busy. And, I still don't feel that I deserve to just go relax this afternoon. But I also think that I can probably, I'd be better off doing something other than over trading, especially when it comes to churning commissions and, getting myself into a pickle. So, by the way, those of you guys who haven't checked out, if you come over to Day Trading Education on our website, warriortrading.com, you could check out my free intro class. If you haven't checked that out, you might want to check it out. You can learn more about my strategies, the way I trade in general. I know many of you have done our demo and checked out our 2-week trial. If you haven't done that, you can always check that out too. I'll put links for both of these in the description. But if you haven't seen this class talks a lot about how I came to develop the strategy that I'm trading today. I walk you through the details of the strategy, my trial and error process of how I discovered it, and I give you some nice sort of tips and tricks that you can apply to your own trading. And you guys would get a copy of my best-selling book here, which is How to Day Trade the Plain Truth. So everyone who watches that class, you get a copy you can download. So maybe check that out if you haven't already, and you're looking to learn a little bit more about how I trade. My thought going into the rest of the week is that, low price penny stocks are what's in focus. So I'm going to keep trading these stocks. I'm going to try to, capitalize on them as best as I can. This is going to be a week where commissions are a disproportionate percentage of my profit relative to what's normal. But, and of course I'll take some trades in my Thinkorswim account for that challenge. But I would rather have this profit here than have said, oh, I'm not trading these because they're too cheap, and then instead have nothing. Right? Certainly is worth it, even though I pay commission on those trades. I mean, I pay commission on every trade I take, but the commissions are just higher because when you use a broker like what I use, we pay what are called ECN routing fees. And so those routing fees are paid to the exchanges that route your orders. And those are charged on a per share basis. And you can't make it per trade. It's always based on the number of shares you trade. So if you're trading 100,000 shares of a penny stock, I mean, literally on a 100,000 share buy order, you would pay between $150 and $300, depending on which route you used. So, you do, not that I'm not doing 100,000 share orders, but you do 10,000 share orders and you get up to 100,000 shares. And now you've got, hundreds of dollars in fees and commissions. So it does add up. And that's the price you pay for direct routing, which I still generally think is worth that. But on a penny stock trading 170 million shares of volume, there's not a very compelling reason to use a direct routing broker. It's awfully expensive. Anyways, nonetheless, that's where I'm at today. And I will also highlight a episode that you guys may or may not have checked out. Let's see, let me grab this here on my channel. So I've got an episode here that I just uploaded earlier today, which I think some of you guys may enjoy. So this is the episode right here. the real reason why I make YouTube videos. I get traders asking me this question all the time. You know, Ross, if you're such a successful trader, if you really make as much money as you say you make, why do you bother uploading videos to YouTube? And so it's a question worth answering. So I'm going to answer it in that episode, so you can check that out. And for those that are curious about how much money I make, you could see my verified 2024 broker statements. These are broker statements right off the website from Lightspeed. And then at the end of each year, I get all those statements audited. So this is an audit just from the last 7 years, but nonetheless, 7 years of returns audited. So the profits are real. And so now the question is, why do I bother making videos for YouTube? And you'll have to check out that episode to learn more about that. All right, so I hope you guys enjoy, and I'll thank you as always for tuning in. And I'll remind you, trading is risky. My results aren't typical, so make sure you take it slow, manage your risk, and I'll see you guys back here bright and early tomorrow morning. I'll be streaming around 7 a.m., hoping for some nice momentum, and hoping that Thursday and Friday can be a nice finish to this week. It was a rough start, but can be a good finish. All right, so that's where I'm at, and I'll see you guys back at it tomorrow morning.